Welcome to Charles Today. It is Friday, the 17th of July, and I woke up this morning to the news that the Japanese market was down 4%. It has recovered a little bit to the close in Asia, and we ended up just under 3% down, but that's quite a big move. That's the daily chart. We've had an incredible run in Japanese markets, largely down to the weaker yen. So that means that Japanese company earnings are higher. This was the downside target given earlier this week, and just shows on the short-term chart we are seeing a bit of a pullback. We've seen that before, but of course a lot of that is that weaker yen does discount the gains because those companies are quoted in yen, so the currency effect discounts that. Fine if you're a Japanese investor, but this dollar yen rate is really quite key. And I've talked about it before. Japanese bond yields, that is also a big concern. And watch for a move above 3%. That is going to be problematic for global markets, is my hunch. Looking at whilst we're here at bond markets, the UK, it's going to be very interesting to see how bond markets react to the new Prime Minister coming in and starting to announce policies. Generally speaking, bond markets don't like big changes, so it will be interesting to see if he announces sweeping changes that could have an impact on the bond market. We've got targets in either direction. The cost of servicing UK debt is really going up, but it's not just limited to the UK. We're seeing it in Germany and Italy as well. We've got an upside target there, new upside target for Germany, and of course the US indebtedness is a global concern, but Japan is the one to watch at the moment. That could be a black swan event. So coming back to the market, we're looking at the US dollar, and we're seeing here we have got this upside target, and that's really quite key. But we are still very much in a range. We can see a deterioration on the short term, and even the weekly chart is not looking great. We looked at the yen, but if we look at sterling, we can see it really is a case of either direction. And here again, UK markets will be looking to see what a new Prime Minister has in store for the UK economy. But interestingly, we have touched 135.60, and the trend has been generally up. And that's slightly to do with less political uncertainty, just knowing that we have a new Prime Minister, and hopefully this one is going to stay there for a while until the next election. There's not much that can be done. He's just in. And so here we are looking at Bitcoin. We're still bearish below the cloud, and the 60-minute chart is also turning bearish. So despite having an upside target, that 65,000 level is just really quite difficult for Bitcoin to break through and hold. Now, we did see some pretty big moves. Not only was Japan lower, China was also lower. And again, really quite interesting that we've dived there. Looking at the short-term chart, the Shanghai index has been a plethora of downside targets below the cloud. And if we go to the Chinese currency, this has been one area of strength against the US dollar. So that is, if we look at the weekly chart, you can really see that the dollar was buying 7.4 yuan, it's now buying 6.75 yuan, meaning that the dollar is less expensive for China, and that rate, meaning that Chinese goods are more expensive in the US, is pushing inflation and also putting some pressure on the Chinese economy. But that's interesting just looking at that currency chart as well. And whilst we're here, just taking a quick look at the Indian rupee, that's gone from 72 to the dollar to 96 to the dollar. That is very inflationary as well. So inflation pressures have not gone away. And if we look at Indian bond yields, we can see we've got borrowing costs in around 7%, significantly higher than we're seeing in Western economies. Coming back to the market in the US, we've got big upside targets on the Nasdaq. This is the long-term chart. The medium-term chart, we're waiting to see if we can activate this upside target. But when we look at the short-term chart, this really is a little bit like a descending triangle building. and that is going to be quite a worry. If we see that breakdown, we're starting to test that level again, and that the normal move is the height of the triangle, which would take us through that. So we do have to watch that in the Nasdaq, and we'll look at some individual constituents shortly. We're seeing the markets opening lower today. The S&P future down 1%, the Nasdaq E-mini future down 2%. Notice how that downside target was met on the future. We do have the UK market looking a little bit stronger. That's because defensive stocks are coming into the fore, but the DAX in Germany is down 0.2%. So again, a new downside target there as well. The Sensex is bucking the trend a little bit. This is the Indian stock market. We've got some upside targets there on the short-term chart, but is still a long way from recovery. We need to break 80,000 to see that recovery. And interestingly, I've just been giving the LSEG webinar this morning, which, by the way, you can access on the updated website. So if you go to resources, you will find today's webinar will be up there very quickly. All of these are corporate training that I give to LSEG, and private users don't have access to, but you can access them on the updated website. And there's all of last year's are here, and this year's are here. So do watch those free resources. But the key thing was I covered moving averages today, and the saying by Paul Tudor Jones, nothing good happens below the 200-day moving average. And here we are still well and truly above the 200-day moving average. So really quite key there. That fact is that the market is still above there. If we look at some other things that have been going on, crude oil up 1%. We put our energy report out to clients earlier today, and we are seeing energy prices elevated. This is TTF. This is the Dutch contract, new upside target there. We're up 3% this morning. We called that bullish to clients. And MBP up 3%. So this is UK gas. Almost certainly when you get your next energy price cap, it is going to be significantly higher, because we've seen a move just in recent weeks from 95 to 135. That's a massive increase in wholesale prices. That's going to feed into consumer prices, which is going to feed into inflation. So it isn't looking great in that regard. Coming back to some of the markets, gold really has been testing this 4,000 level this morning, and we are sitting at 3990, so $10 below that 4,000 level. If we look at the short-term chart, you can see that has been in a downtrend. So really quite key there that we are seeing this pressure, and so precious metals and silver has broken the critical 57 level. We are now sitting at 55. So that recovery in precious metals is not coming through yet. SpaceX, looking at the short-term chart here, the downside targets all met as predicted. We've been talking about that. We are sitting at 131. The IPO price was 135. You could have got in when at the market open at 150. Everyone who bought SpaceX at IPO or soon after, in fact, everybody is underwater. That is going to cause a lot of selling pressure, and that is a little bit of a problem for tech stocks in the US. That is going to really hit sentiment. Apple is holding on to its all-time high, and that's good news. And we are seeing other stocks were quite badly hit yesterday. Amazon down 2%. Alphabet, one of my calls at Christmas, you'll see it in the LSEG webinar. If you go back to the Christmas one, calls for 2026, you'll see when that call was made, we were sitting at around $310. We've reached 400 at one point. We still have upside targets. I even heard yesterday that Buffett has put 30 billion into, well, Berkshire have invested 30 billion, but that's quite key. We saw the Nasdaq chips have been badly hit. They're continuing to be hit. That's not great. And do keep an eye out on UK supermarkets, Tesco, Sainsbury's, all starting to look like they may break out. So that's quite good as well. That's it for today. Until Monday, have a great weekend. Bye for now.